You are on the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 250,000 reputation points. And what I love the most is sharing educational breakdowns that show you how you can be looking for the best trading opportunities in the market. So without further ado, let's go and see which is today's Forex pair that we need to break down. The pair that I want to speak about into this video is AUDCHF. Now, why do I want to speak about AUDCHF? Because this pair is very near to providing to us a good trading opportunity. So I want to give you guys a full breakdown of the situation that we have to show you where we can be looking for the next potential setup on it. And as usual, I will be keeping this analysis as educational as possible. So first, I will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds are doing in the market. And by the end of the video, by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we have the highest probability setup here on this pair. Now, starting from the monthly time frame, what we can see is that the market has just provided a quite strong impulse to the upside. Now, generally speaking, after the creation of an impulse, what you want to see is the market provide a correction. Specifically, you would like to see the market provide a correction at least to the 0.382 of the Fibonacci taken on the monthly impulse. So in this case, from this low to this high. So here on the monthly is quite clear that we do expect the market to provide to us a nice correction at least to this area. Going down on the weekly time frame, what do we have? Now here on the weekly, we can see how the market has just provided a nice M pattern. Now after the creation of an M pattern, what you expect is for the market to provide a move to the upside to go and complete the pattern at the previous support turned resistance. And we can see how here on the weekly time frame, the market has done exactly that. The market completed the pattern at the neckline, which is the previous support turned resistance, meaning that at the moment, since we are testing the neckline, we are testing resistance because by definition, the neckline of an M pattern is a previous support turned resistance. So here on the weekly time frame, what we are actually testing is a previous support turned resistance that we do expect the market to reject to the downside, possibly completing this nice impulse correction and impulse pattern to the downside. Going down on the daily time frame, what do we have? Now here on the daily time frame, we can see how the market has just provided a nice M pattern, actually overextended M pattern. And generally speaking, after the creation of an overextended M formation, what you want to see is the market provide a nice move to the upside to complete the pattern at the previous support turned resistance. And we can see in fact how this market has just created exactly the move to the upside that we wanted to see, completing the pattern at this previous support turned resistance. And by the way, I made a full breakdown of AUDCHF when the market was at this area, explaining all the reasons for which from here we did expect the market to provide this move to the upside. And in fact, that is exactly what the market did. And by the way, I will link in description this previous analysis so you can go and check it out for further reference and more free education. Just a quick thing, for more educational breakdowns, make sure you subscribe to the channel and hit the bell. Now here in the daily time frame, what we can see is that the market is currently stuck in between structure. In fact, what we have here is a strong area of previous support, which the market broke to the downside. And at that point, this previous support was turned resistance here. The market tested and started to reject the zone to the downside. And at the same time, what we have here on the daily time frame is a quite strong area of previous support, which is now against support here, meaning that actually at the moment, even though from a monthly and weekly perspective, we would like to see AUDCHF provide a move to the downside, here on the daily time frame, we still have bullish structure, or better said, we are stuck in between the support and resistance. But since the market is currently rejecting a strong support area, at the moment looking for a short, as the monthly and weekly were showing, is definitely something that we still cannot do. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are doing in the market, what we can see is that with the last reports, net positions have been decreasing on the AUD, meaning that hedge funds have been shifting their positioning to the negative side. In fact, we went from having 12.2k net positions all the way down to having 3.7k net positions, with 1.3k shorts added with the last report. So the AUD is starting to get weaker, and weaker. And if we go and see what we have on the CHF, we can see how it's actually getting weak as well, with the net positions dropping from 4.2k to 800 net positions. So overall, the CHF is getting weak and the AUD is getting weak at the same time, which explains why we're getting all this sideways price action. In fact, if you have a strong currency against a weak one, you will have an uptrend. If you have a weak currency against a strong one, then you will have a downtrend. But if you have strong against strong or weak against weak, then you will have a sideways market with a lot of structure, which is exactly what we are getting here on AUDCHF, since both the AUD and the CHF are weak at the moment. So how we can be looking for the next opportunity here on AUDCHF? Well, as usual, with students, we will be reactive and not predictive. The monthly, weekly, and daily timeframes, those are the best timeframes from a directional perspective. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So if, and only if, the market will manage to break below the support, at that point, this previous support will be turned resistance here. So after the break, on the retest of this previous support term resistance, inside of this area, what we will be doing with students is monitoring price action from a 4-hour perspective and lower. And we will be waiting for the market to shift from a 4-hour and lower bullish market as we have right now to a 4-hour and lower bearish market. And as soon as the market will shift from a bullish to a bearish market, at that point, we will be adding AUDCHF to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to complete this impulse correction and impulse pattern to the downside and for the market to provide a lower low. If you enjoyed the video, make sure that you smash that like button and comment below. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade the strategies with me. In fact, every day I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And we also have a daily Q&A session in which I answer all your questions. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.